Measurement, reporting, and verification is often called MRV. It is the basic system for climate accountability. Measurement is the physical or digital counting of an activity or emission. Reporting is the structured gathering of that data against a known framework. Verification is the independent checking of that reported data against set rules. MRV does not exist for its own sake. It produces numbers that drive specific decisions. As a climate consultant, you must know that MRV serves four main decision classes. These are compliance reporting, carbon crediting and issuance, finance disbursement and results-based payment, and internal management. For each class, a clear outcome depends on the accuracy of the data. A weak system creates clear and cascading failures. You must build the right system for the right decision. The first decision class is compliance reporting. Here, the number from an MRV system decides if a country meets its legal or treaty duties. When the system is weak, the failure mode is noncompliance. This leads to diplomatic friction, trade penalties, or a loss of standing in international forums. The clearest real example of a compliance-driven need is the biennial transparency reporting cycle. This sits under the United Nations Framework Convention on Climate Change Enhanced Transparency Framework. Parties to the Paris Agreement submit biennial transparency reports every 2 years. People call these reports BTRs. The first BTR was due on 31 December 2024. A nation must accurately measure emissions and track policies. If it cannot, the BTR fails to show compliance. This undermines the entire transparency framework. A BTR covers several mandatory parts. These include the National Inventory Report and progress towards the nationally determined contribution. They also include policies and measures, and climate change impacts and adaptation. Further parts cover financial, technology transfer, and capacity building support. Finally, they cover capacity building needs and areas for improvement. As of July 2026, a record 37 countries had presented their first BTRs. They did this at the third session of the Facilitative Multilateral Consideration of Progress. This event happened during SB 64 in Bonn. If a nation's underlying MRV system is weak, it cannot track these details well. The BTR then fails to prove compliance. This weakens trust in the whole system. Every part of the BTR relies on solid data. The second decision class is carbon crediting and issuance. In this context, the number from MRV decides the volume of carbon credits issued to a project. The failure mode of a weak system here is the issuance of invalid credits. This destroys market integrity and buyer trust. A real example of a rulebook change is the Article 6.4 Paris Agreement crediting mechanism. People call this the PACM. The first PACM methodology entered into force on adoption on 30 October. It is valid for 5 years unless revised or withdrawn. It is the first methodology to show how baseline alignment with the Paris Agreement works in practice. With it, people describe the UN carbon market as fully operational. Existing projects must transition to the PACM methodology for all vintages from 2026 onwards. A vintage is the year the emission reduction took place. Also, an interim registry launched in early 2026. This happened while workers complete the permanent infrastructure. A registry is the official database where credits are recorded. This transition forces project developers and consultants to completely respecify their MRV systems. They must align with the new methodology and registry rules. This ensures the numbers generated meet the updated crediting rules. If they do not change their systems, they cannot issue valid credits. The new rules force a total rethink of how projects measure and report their data. This protects the integrity of the new market. The third decision class is finance disbursement and results-based payment. Here, the number from MRV acts as the trigger for releasing money. What depends on the number is the transfer of funds. Investors, development banks, or climate funds send money to the implementing entity. They do this based on pre-agreed performance targets. When the MRV system is weak, the failure mode is delayed or withheld funding. Financiers cannot verify that the required climate outcomes actually happened. This creates cash flow crises for projects. It also erodes the viability of results-based climate finance tools. The entire premise of results-based payment relies on the verifier trusting the data pipeline. If the measurement is flawed, the payment trigger cannot be pulled. When finance disbursement stalls, the whole project can fail. Projects need steady cash flow to keep operating. If they cannot prove their results, the money stops. This hurts the project developers and the local communities involved. It also makes investors less likely to fund future climate projects. Results-based payment is a powerful tool, but only if the data is strong. The verifier must be able to trace every number back to its source. They need to see a clear audit trail. An audit trail is the record of every step in the data's journey. Without this trail, the financier has no proof. The finance disbursement then stalls indefinitely. Good MRV is the bridge between climate action and climate finance. The fourth decision class is internal management. Within an organization or a government body, the MRV number informs operational and strategic decisions. What depends on the number is the allocation of resources. It also drives the prioritization of mitigation actions and the tracking of progress against targets. The failure mode of a weak internal MRV system is misallocated capital and strategic drift. If management cannot trust the data, they cannot know which actions are working. They cannot optimize their operations. This leads to wasted money and missed reduction targets. Internal management needs continuous and reliable data flows. Managers use this data to adjust their plans dynamically. A weak MRV system simply cannot meet this need. It breaks under the demand for constant updates. Consider a company trying to cut its energy use. It needs accurate data to know which buildings are wasting power. If the MRV system is weak, the data might show the wrong buildings. The company spends money fixing the wrong problem. The real energy waste continues unseen. This is strategic drift. The company misses its targets and wastes its budget. A strong internal MRV system prevents this. It gives managers a clear picture of reality. It shows exactly where to focus their efforts. The system must be fast and reliable. It must update often enough to be useful. If it takes a year to produce a report, it is too slow for internal management. Managers need data they can act on today. Across all four classes, the underlying requirement is the same. The data must be captured, standardized, and verified without manual reentry errors or structural gaps. You might support a nation in compiling its biennial transparency report. You might guide a project through the Article 6.4 PACM transition. You might structure a results-based payment mechanism, or you might design an internal tracking system. In every case, you must tailor the MRV architecture to the decision it supports. A system designed for internal management will rarely survive the rigor of a carbon crediting verification process. A system built for compliance reporting may be too slow and heavy for agile internal decisions. Understanding the specific decision class dictates the required rigor, frequency, and boundary of the system. The boundary is the physical or operational limit of what you are measuring. The frequency is how often you measure and report it. The rigor is how strict the verification process is. You must match these three things to the decision class. If you do not, the system will fail. It will either be too weak to prove compliance or too heavy to be useful. As a consultant, your job is to design the right system for the right job. You must know what number your client needs and why they need it. You must know what happens if that number is wrong. This is the core of good MRV design. It is the difference between a system that works and a system that fails. Now you should produce a one-page decision class mapping document for a hypothetical client. This document must identify which of the four decision classes applies to their current objective. It must state what specific number their MRV system must produce. It must also state what the precise failure mode will be if the data is found to be inaccurate. This exercise will help you see the direct link between data and decisions. It will show you why a weak system creates real-world failures. Keep the document simple and clear. Focus on the exact needs of the client and the risks they face. This is the first step in designing a strong and reliable MRV system. By doing this, you will learn to build systems that truly protect climate integrity.